Ultimate Traders Reddit. This is the trading plans, June 19th, 2022. The market is closed tomorrow. So, unfortunately, we're at a point where the market has come off big time. The NASDAQ is down close to over 30% off its highs. S&P low 20 off the highs. So it's not as easy to just buy puts and everything. Back in October, it was the easiest thing. You could pick like 50 high flyers and buy puts on them all. Even in January, February, it was easy. But as the market started coming off, as the NASDAQ started to hit 12, 12.5, 13, it wasn't as easy to get puts. Because when the NASDAQ was 16,000, you could just buy puts on everything. Now, the other day, we just had the NASDAQ hit 10,500. It can go lower, but it can't go a lot lower. So it's very, very difficult to even buy, puts. I wouldn't buy too many calls. I might buy certain calls or certain stocks. Now, after the CPI on last Friday, that was absolutely horrendous. 8.6. We got a first 0.7 hike. I pretty much don't want to buy any stock, honestly. I pretty much, maybe I would, but I pretty much don't want to buy any stock. If you want to buy calls on those stocks, you can. I would still buy some puts, but only if the stock has rallied. Like SGEN got some kind of FUD that Merck is going to buy them out. All SGEN does is lose money. The cost of money is going higher. Why would Merck buy a company that is just blowing out cash? If they do want to buy SGEN, which I'm not saying is impossible, they would want to buy on the cheap, not overpay for a cash burner and a loser. So I might look into buying puts on SGEN on Tuesday. It hit 175 on Friday after Kramer even said it's possible or something like that. That's a freaking joke. It's a joke because right now the cost of borrowing money is high, and it doesn't make any sense to me why someone in this environment would want to buy a cash loser at this higher price, maybe at 100, but not at 170, not like close to $40 billion for a company that doesn't make any money and doesn't have much in sales. So it's becoming a lot more difficult. But I know I don't expect everyone to be like me. So this is what you want to do. S&P 500 is trading at close to 16 times earnings. All right. People are asking me almost daily, is this the bottom? Is it okay to start buying certain stocks? So this is what I just have to say to you on those questions. S&P 500 is supposed to be the 500 best companies in the U.S. They trade at 15, 16 times earnings, and generally they grow earnings, that's bottom line, close to 10%, 5 to 10%. So if you want to buy a company, you want to look at something that's trading at 15 times earnings or less and grow at 10% or close to 10% earnings before you want to buy. Because, like I said, the S&P 500 right now is trading at close to 16 times earnings and grows close to 5 to 10%. This year, the forecast in January was a growth of 9%. They're saying it's about 5 to 6% now. They are wrong. They are wrong. I don't know if it's going to be 3 to 5% or 0, meaning no growth. But they are wrong. It's not growing at 5 to 6%. You will see they are wrong. Nathan from Queens is right. So if you want to buy stocks, like I was just reading people were talking about PayPal. So let me take a quick look at PayPal. Charging my phone. But people were just asking on PayPal on Reddit. So I'm doing this live with you all. So let's take a look. Just know that PayPal is growing now, I believe, close to 12%. So that's growing close to S&P 500. So that's sales, top line. So S&P 500 stocks normally grow earnings close to 10% and sales 10 to 20%. So right now the P ratio on PayPal is 24. All right, so 24. So it higher P ratio, the S&P 500, and it's growing at 11%. What does that mean? That means that you're paying a premium for PayPal. Now, if you believe in PayPal, you have a lot of conviction, you don't mind holding this long term. If you want to buy it, maybe you want a dollar cost average and buy it like every week or every 2 weeks. You buy some because it's harder time to bottom. However, since this is like S&P 500 in growth on the top line, but the P ratio is 24, let's say we want to give it a 15 times or close to 15 times PE. So earnings is going to be about $4. So that means you might want to buy it close to 60. Right now it's $72. Now that doesn't mean that it's going to go down to 60 because this is the stock market is a live auction. But closer to 60 seems more closer to the S&P 500. Now what I was buying, I've been buying 1W. So if I look at 1W had growth of 25% on top line and bottom line like 20%. So it grew faster than the S&P 500 on both top and bottom line, and the P ratio is 3. The PE ratio is 3. So in terms of 1W, one marine, symbol 1W, and S&P 500 is cheaper than all the stuff on the S&P 500. So this is something that you want to buy. Now, I've been trading a lot of this stock called Love, but right now after the news with the CPI, I'm afraid to even buy BZH, Beazer Homes, which has a P ratio of like 2, and they're going to make $5 a share. They smash earnings. But let's take a look at Love. And BZH too, like I'm saying. So Love is close to $30 a share. They beat earnings by a lot. The P ratio is about 10. P ratio is about 10. Let me take a look at the top line growth. They just reported earnings. Growth was 40% at Love. So that's a lot faster than S&P. They made money. They're growing bottom line. So these are stuff that you want to consider before you buy. Now, if you don't want to risk the capital, because like I said in the previous video, the state of the market is bad, you could buy calls on these stocks with like a 3 or 6 month date out. Now, I didn't want to buy anything on Wednesday. I was waiting for the Fed, and the Fed news was terrible. The market rallied. I did try to buy puts on a couple of companies. I did the same thing Thursday. I did not get filled. Friday, I had 2 closings, so I was not able to trade. So this week, as it comes up, I might look to buy calls on companies that are making money, growing faster than S&P 500. Not stocks though. I'm looking maybe to buy a couple of calls, and I'm looking at buying puts on some of the high flyers. Now, the only thing with the puts is on Thursday and Wednesday, I've been trying to buy puts like on SGen 2 or 3 months out. Give me more time because like I said in this video, it's not so easy because everything has come off a lot. Doesn't mean it can't go down more, but let's take a look at Roblox. So Roblox was $140. Now it's like $28. Can Roblox go down? Of course, absolutely. It shouldn't even be $20. It should be like $15 for the risk involved. But 28 to 15 is a lot different from 140 to 28. So it's just not as easy right now to just buy puts on anything. I wouldn't buy calls on stocks unless it's trading below the S&P, and I would want to buy time because like I said, we have not seen a bottom. I can't tell you what the bottom is because market sentiment changes daily and all we're going to get is bad news. So be careful on what you trade. Do as you will. If you decide to throw a grenade like Revlon or Redbox, I would suggest you do it in the morning and get out before 12 o'clock. Whatever you want to do is up to you. Same thing with AERC. So it's getting pumped by retail, so they're moving. But that stuff is not guaranteed. I'm risk averse. I don't want to take any risk right now, especially since I see the market going lower because I don't see good information coming out for a couple of months. July 10th, we're going to see with the CPI. If the CPI numbers are good, maybe we can start buying. But I expect them to be bad, and we're going to see. All right? Have a great night. Happy Father's Day.